Hello again, accounting students. This is Mr. Shank for Accounting 1A. We're continuing on in Chapter 4. We're on Working Together 4-2. So this is kind of exciting stuff. However, I'm logged into Applia, so I'm on course outline, and then I'm going to scroll down to week 11 actually, and Working Together on your own 4-2 is what I'm doing, and then I'm going to click on Working Together 4-2, and it's loading here, and it opened up a journal with all the transactions journalized in it. So if I look at the instructions on page 101, it says there's a completed journal and a general ledger account. It says post all the entries into the general ledger. Well, in real life, it's done on a computer, and there's a push of a button. It does it automatically for you. But we're going to do it manually, so you understand how it's done when the computer does it automatically for you. So, if we look at our general journal, note the page is page 1, and we're going to go to March 1st, and the first line is cash. So I'm going to open cash, and there's my ledger account. And so I'm going to record March 1. The post reference is going to be G1 for General Journal page 1, and it's a debit of $5,000. So I'm going to put $5,000. And since 5,000 plus nothing is 5,000, so 5,000 is my debit balance. Oh, it's 5,000, sorry. And then I'm going to put the post reference of 110 in the post reference column. That is taking that information from my general journal and recording it in my general ledger here. That's called posting. So now I'm going to switch to the capital account. And it's March 1st is the date. Post reference is G1 for General Journal page 1, and it's a credit of $5,000. And 5,000 plus 0 is 5,000 credit balance. And so the count number is 310, notice here. So I'm going to go up to 310 and write that reference there. So I'm just going to keep going on. So that transaction has been recorded in my general ledger, and that's called posting. So now I'm going to the next line, prepaid insurance. And this account is March 3rd. Had to go look. G1, and it's a debit of $660. And so now my balance is $660 in my prepaid insurance account. And then I record $140 here. So I'm on the next line, line 4, which is cash. I'm going back to my cash ledger. It's the 3rd. It's G1 for the post reference. It is a credit of $660. And so now I have a new balance. So let me minimize this a little bit so it's easier to work with. And open my calculator on my computer so you can see what I'm doing. And there's my calculator. So I'm going to take 5,000, and you could probably do this in your head, but 5,000 minus 660 gives me a new account balance of $43.40 for cash. Then I write the 110 here in the post reference of the journal, and I'm on to the next line. So let me keep going. I can go a little bit faster now because you're kind of getting the hint of this. So this is March 4th. Post reference is G1 in the ledger. So I'm leaving enough information so if somebody needs to get back down, they could do that. Looks like it's a debit of $78, and I have a balance of $78, and 130 is my post reference in my general journal. So I'm on to line 6. This is accounts payable Josh Supplies. So let me open Josh Supplies. And I'm having a difficulty. There it is, Josh Supplies. There we go, March 4th. The post reference is G1, referring back to my journal on page 1. This time it's a credit of $78. There's not any balances, so my balance is now $78 for my accounts payable. And then I record the 210 in my post reference column. So if I keep going, we're going to go to cash. This time we're on the 8th. It's G1. Looks like a debit of $675. So I can take my calculator over here and add $675. So my new balance in cash is $5,015. And then I record the 110 in my post-reference column, my general journal. So now I'm on to sales as my next ledger account. So I open sales. It's March 8th. It's G1. It's a credit of $675, which is good because this increases owner's equity. Sales do. And then since there's not a balance, my new balance is now $675. And then my post reference is 410 for sales in my general journal. So now I'm on the line 9, which is accounts receivable, Danielle. And Danielle is a customer, a good customer, so we give her a line of credit. And we let her charge things with us. So on the 9th, she came in and bought some services from us, and she agreed to pay at a later date. And so we sold her the service for $163, and so I'm going to do a debit to the general ledger account and the debit balance, and 120 is my post reference column. And the next line is sales. So let me open sales again. This is on the 9th. It comes from G1, general journal, page 1. It's a credit of 163. So now I take 675 plus 163 because they're two credit amounts, and I have a new balance of 928 is my new balance in my sales account. So I added the credits. And then I put 410 in the post reference column of my general journal. Now I'm on to rent expense. This is March. We haven't left the month. On the 12th, G1 is the post-reference column, and it's $375 is my post-reference amount.
Do you know where Mrs. Lunt's class would be?
209.
Okay.
So, and then I have a new balance at $375. Sorry for the interruption. And then 510 is my new balance. My 510 is my post-reference in my general journal. My new balance for rent expense is $375. So now my cash account on the 12th is G1. Looks like it's a credit of $375. So I go to my calculator, take 5,015 minus the $375, gives me a new balance of $46.40 in my ledger account. And that's my ledger's done, so I'm going to go and put 110 in the post reference of my general journal. So accounts payable, Josh Supply on the 15th of March. Notice I don't have to repeat the date. It looks like it's a debit of $50. So, but I have a credit balance of 78, so 78 minus 50 is 28, right? For the new balance. And this is 210 in my post-reference column, my journal. And so now I'm going to go to cash. I know this is a tedious process, right? Thank goodness for computers. And it's a $50 credit. So if I go to and minus this from my calculator, I have a new balance of $45.90. Okay, and then I go back to my journal and record the post-reference 110, which is the account number for cash, in the post-reference column. I'm still in cash, looks like on the 16th. Post-reference is G1 for general journal page 1, and it's a debit of $100. And so I can take the $45.90 plus the 100, gives me a new balance of $46.90. And so my ledger's done, so I'm going to record the account number 110 in the post-reference column, my general journal. So now I'm on to accounts receivable Danielle Bastian. This is on the 16th. And looks like it's G1 as a post-reference in the ledger. And looks like it's a credit of $100. So now I have a debit balance, so I take the $163 minus the credit of $100, gives me a $63 balance. And then I take the post-reference column 120 and record it in my post-reference column, my general journal. Okay. And so the last one is the drawing account. Remember, the owner can do only two things. They can and so G1 is my post-reference. It's $1,000 for the drawing account. And the debit is $1,000. And this is the owner's equity account, so I would do a post-reference of $320 to drawing. So there's my drawing account. You can only invest, the owner can only invest or withdraw from the business. The last one now is cash. And this is on the 25th. It's G1. It's a credit of $1,000. So now I have a new balance of $36.90 in my cash account. I could plug that in my calculator, and it'd give me that too. But and then the last thing is my post-reference 110. So there's posting. I know that's a manual way. It takes a long time to do that, but thank goodness for computers. They can automate that, and for now we're good to go. So you should be able to do working together. You should be able to do on your own 4.2 and then application 4.2. So good luck and have a good day, everyone. And we'll see you in the next video.